All right. Welcome, everybody, to our latest episode of Minds of Market. This is a fantastic one today, I promise you. This gentleman that is here with us today is someone that I, fortunately get to actually be on live camera with once a week. I wish it was more. I think he is absolutely one of the brightest minds out there when you're talking about charting and analysis, whether it's technical, fundamental. I mean, he covers all asset classes. So I am really proud to have Kevin Green on with us today. Kevin's got over 13 years experience in the financial markets. He is currently the senior markets correspondent at the Schwab Network, and his primary coverage encompasses equities, options, and commodity markets. Before being over there at Schwab, Kevin managed a derivatives desk, educating clients through both hedging and speculative strategies using options and futures. He managed fixed income trading at Options Express, which when Kevin and I were talking about this, I didn't even know that because I was one of the original people at Options Express back in Chicago. Our paths probably crossed at some point. But complementing his vast financial expertise, he holds a master's in data analytics, which definitely scares me. I'm not going to have that conversation with him. And this unique blend of data analytics proficiency coupled with deep market insight underscores Kevin's just his distinct approach to financial analysis. And I'll mention this a few times, guys. If you ever turn on the Schwab Network, Kevin's on various times through the day. We're on together at 9 o'clock, 9:05 Central Time on Wednesdays. You got to tune in and listen to this guy. You got to find him on social media. Kevin, was it KG Bull and Bear, right?
Yep.
So here's what I got for you, Kevin. After that intro, hopefully you're willing to spill it all out for me. But how did you get into this business? Because I know you started in Chicago and you worked your way up, and now you're the guy at Schwab. So how'd you get into this?
Yeah, so actually, my mom was actually in the finance industry. She was actually a loan officer for Citibank or Citigroup at that point. So
in Chicago or?
In Chicago, yeah. Okay. So, I mean, I grew up around, watching the CNBC and Bloomberg and stuff like that at a very young age. Actually, I remember watching like Bauer. Yeah.
Are you a Cubs fan or Sox fan?
Oh, man, I'm a Sox fan. So we might have to.
All right, guys, thanks for joining the
podcast. Yeah. But, fun fact, though, Billy Williams is a family friend of ours.
Seriously?
So, yeah, I grew up with his granddaughters.
You have no idea how much Billy Williams paraphernalia I have in my house. Signed jerseys, signed cards. I have sorry, everybody, that we're deviating from the podcast, but when it comes to the Cubs here, I have a signed scorecard from... It's either 1972 or 3. My dad used to take me to Cubs games all the time, and Billy signed my scorecard for me. So that's
good,
awesome.
Really good guy, really good family as well. So yeah. But yeah, so I actually started. So I've always been around this, and actually I kind of joked about it. Like I've seen, Bob Iacchino and all those guys, like when they were literally in the pit of the Chicago Board of Trade and things of that nature. So kind of always grew up into it, and then decided to actually make it a career. So going to school, I went to a junior college, Wabanzi Community College out there near Aurora, Illinois. And did that, worked full time, got my degrees, and got an opportunity to start at Edward Jones as a financial advisor, really actually in their Arizona call center to manage branches that didn't have financial advisors. And then from there, went and took over a branch in Chicago. And then I got over to Options Express and getting into the derivative side of the business. And then, Options Express was a very small boutique shop. So you wore multiple hats. So I was a derivatives, phone broker. I was also managing the fixed income operations there as the principal there. I was helping out with compliance and regulatory matters. So the short sell team, like you needed the short stock, I was the guy to talk to. So it was a whole bunch of different things. And it gave me a really good foundational base, for the industry. And it's just been, accelerating ever since. And so I started doing more of the media stuff about, let's say, like 6 years ago, for Schwab Live, which is now Schwab Coaching. And then came over to the Schwab Network side of it about a
And
year
for
and a half
those that
ago.
don't know, Options Express was eventually bought out and purchased by Schwab.
Yeah.
So that is so funny. I'm sure, because I was in that office at Options Express numerous times. We must have passed by one another, been in the same office together. So how did you, though, with that background, how did you get to where you are now with your technical fundamental analysis? Because anybody can look at charts and say, I see this, I see that, but I know from our interviews together and when I listen to you on the network and read some of your pieces that you've got such a deep dive, but a deep understanding that is so easily explainable to people. I mean, how did it take you to get there? I mean, that's not easy. It's definitely not easy.
Yeah, well, I started trading Forex. So I started trading currencies. That was the first thing I ever traded, which is actually, I would not recommend that to anybody else. But it was the only thing I could trade.
Here.
Yeah, it was the only thing I could trade while I was going to school during the day. It was the only market overnight that I could trade. So you learn the technical aspect of trading currencies, right? I mean, I would say 80% of it's technical, and then you have that 20% that's really going to be the fundamental aspect of the economic data, or whatever central bank wants to run over your stops, and you cry to bed after that. But so that's where I kind of got into the technical analysis, and then the fundamental analysis. I'm a hobby programmer, so I program in Python and R, and so you kind of have to have that foundational structure to understand.
See, I knew I was going to get scared away with that master's that you got.
So it's kind of like all culminating. So Scott, everybody has their own different strategies that are out there, right? You have technicians, you have fundamental analysis, and for me, I like it when you can blend both of them together. If I can find a fundamental case and I can find a technical case, that makes me feel a lot more confident about a particular movement in the stock, whether up, down, or even sideways, and leveraging options to be able to execute. So that's kind of how I've been able to highlight and grasp every single bucket. And that's my thesis really is, what's the background of that market? What's the fundamental landscape in that market? What's the technical landscape? And then how do you execute moving forward? So
when we're on together, it's always about a particular stock. It's an equity. And I'll get to that in a moment because you always burst my bubble. But I follow everything you do, and your depth of analysis across most asset classes to me is really unrivaled. And I saw just this morning, actually, you had put out a piece, some research on your correlation between PPI, CPI, and PCE. You don't see a lot of that out there in terms that the average reader, the average trader, the average investor could really understand on how that could affect a trade they're going to make, or how that could affect, what it might do to the market. I mean, whether it's eco data like that, or commodities, crude, China, or talking about what's going on in China. I mean, last week you just talked about the inverse correlation breaking down between TNX yields and the SPX. I think that was last Monday or Tuesday maybe. And then all of a sudden, boom, look what happened to the market. That, we saw the big sell-off in the market as yields were still coming down. I mean, you anticipated that. You were a day or two ahead of what really unfolded there. To me, I'm a trader by nature, and I look at technicals and fundamentals as a secondary. But I just don't understand how you have that vision. I mean, you break it all down, and I mean, people just have to follow what you're saying because you make it so easy to follow, and the data is right there. And so let me talk about that one, because that one is so right in front center of the marketplace right now. Yields have been, I guess we could call it, tumbling for the last several weeks, as the market was up. How did you just picture that? And then all of a sudden, boom, the market gets in a little bit of trouble towards mid-end of last week.
Yeah. So, once again, kind of going back to that correlation type of analysis here, we usually would see an inverse relationship between the yields and equity markets. But what we've seen over the last couple of weeks, as you kind of talked about, yields have been breaking to the downside here. And we also are seeing that correlation with gold. And so I'm going to throw that in there, is because that's kind of the thing that ticks that actually sparks this whole thing. Sometimes you can have these weird correlations where, yields move up and the equity markets move up for whatever reason. That's fine. But when you have that happening, as well as gold making new all-time highs and spiking the way that it is, and then when you look at the underlying fundamentals of gold, and the net long positioning that's out there, that's rapidly expanding right now. Now everybody wants to get in gold in one way, shape, or form. But at that time where we saw that spike to the upside, the net long positioning wasn't that great. So there was a breakdown that was there. And there's only a couple of things that, in my mind, that could really justify that particular move. Either there's an anticipation of hotter inflation coming down the pike here, and we have an inflation print tomorrow for CPI. Let's see if that actually comes to fruition. You have the unwinding of the yen US dollar trade, that carry trade, Scott, that trade's been out there for the last 30 years. And if you have enough money, you can make a significant amount of money on that spread. It's a small spread, but you got enough aggregate dollars. So a lot of hedge funds and managed money has been utilizing that spread. Well, what if that does unwind? That could also cause that yield or that gold move to move higher. And then also maybe that flight to safety in treasuries moving to the downside here. So all of those different dynamics, when you're looking at non-normalized markets, is when I'm saying, okay, there's something here. And that's when I kind of look at, whenever a correlation, it's like 80% of the time something should, like the VIX. VIX goes up, SPX goes down 80% of the time. 20% of the time, they actually move in the same direction. Yep. And you know this. Usually when they move in the same direction, it's not a good sign. And then,
exactly right.
and then I look at that across multiple different asset classes. And once they start to align, gold moving up, equities making all-time highs, that doesn't really happen that much outside of an inflationary environment. Why would you buy treasuries at this time? Do you think something's going to be peaking here? So that's where it's like, all right, let's all throw it together. And then you talked about it, making sure that people understand it. And I think you do a really good job with that as well, right? We could talk about all the underlying technicals and theta decay and all this backwardation and stuff like that, but people just want to know, what are we talking about? How do I get to that information like you're talking about here? And I think that's really what I pride myself in, taking a very obscure type of topic and trying to break it down for everybody to be able to comprehend as much as possible.
Well, so now I'm going to go into that. So as I said, Wednesday mornings, Oliver on the network hosts a show, and we talk about a specific stock of the day. It can be a stock that has earnings coming up or something hot in the news. And so, I don't find out which stock I'm going to talk about till literally, 20, 30 minutes before I'm on. And, I'll look at the charts and I'll look to see, what kind of option play. I don't know how far in advance they let you know.
About 45 minutes before.
Okay. But 9 times out of 10, maybe even more than that, I've got, notes in my head prepared what I'm going to say from a technical or fundamental basis. And you just blow my cover. You cover it. You already, you've already mentioned it. And that's why so often I'll refer when I'm in the conversation with Oliver, I'll say, hey, you and Kevin already covered this, but so I was curious though, if that analysis, you get kind of the same time frame as I do, or if they tell you the night before or something, but
I wish.
I think we see a lot of the same things, especially when it's in the equity markets, because that's my specialty, but you see it in all markets, whether it's equity, fixed income, currencies, whatever it is.
Yeah, and I would say, so you and I, we pretty much have the same type of time frame when it comes to that information. So, a lot of the time, what I like to do for those previews, obviously I'm talking about the fundamentals and what the earnings estimates are. I like to look at the implied moves. Then for me, Scott, flow data is also very important to me. So how is the market actually structured? And that kind of, provides the leaning one way or another. So I think you've been hitting home runs lately. So, which stock can I actually talk about here? But the Kroger one was a perfect example, right? That stock's been basing for so long. And we know the fundamental story when it comes to the inflationary impacts that it's had. A lot of those staples and a lot of these retail, when you talk about these grocers, now they're at tailwinds because they're not going to move prices to the downside. They're just seeing margin expansion.
And people, unfortunately, for most of us, have accepted it.
Yeah.
They've accepted pricing.
Yeah, and staple prices, when you're looking at groceries and things of that nature, they usually don't go down outside of some major event. Usually once they're up there, they stay up there. They don't really have that much competition, especially when you're looking at Kroger. So, I mean, the fundamental thesis was there. You kind of looked at the chart, and, I mean, it was basically screaming break up or break down. And then the lack of positioning. No one was actually positioned for an upside move, right? So you kind of had that catalyst. So that's kind of all of those areas. And then I just try to kick it over to you to be able to tee it up. And sometimes we're not on the same page. And I like that too. Sometimes it's like, hey, I have no clue how this stock is going to react to the downside here. And then you're like, yep, this is what's going to happen, and you hit. So sometimes the fundamentals work out, sometimes they don't. And I think having all facets of the market, technical, fundamental, and positioning data is just critical to be able to get the right landscape of the environment for a particular stock or an index or a commodity.
Well, that's one of the things I love most about our segment on the network is that, we're laying everything out there, but just because the data says this doesn't mean the outcome is going to be this, right? So people have to understand that. People have to understand that just because, your technicals may align with all the stars out there and the fundamentals are what you think they are, does not mean that is going to be the reaction. And so when I talk about my trades, and they're always example trades on the network. But when I talk about my trades, they are always either a spread or from the long side where my risk is 100% defined. And I will, mention that multiple times because I am, and have been my entire trading career from the floor to being on the screens to being an educator now, one of the most risk averse traders. Doesn't mean I can't be aggressive. I'm always very aggressive, but very risk averse. And so I will always trade 100% risk defined. And, you understand the positions I'm putting on, whether it's just a plain vertical, a butterfly, an iron condor, and the rationale behind. But what I love what the network does and what you guys do is you really break it down and make it easy for the casual trader that really doesn't understand options or the dynamics behind it to follow it and understand it. And I think that's why the viewership is so good also.
Yeah, definitely. And then also too, I mean, it's a tool. These options are tools nowadays. I mean, 10 years ago, when you're talking about an options trade and, everybody's kind of looking at you like, whoa, this guy's trading derivatives. Yeah, but now a lot of retail traders are utilizing it, and hopefully in the best possible manner, being obviously having their risk tolerance out there. But a lot of them are actually utilizing it to try to improve their long-term portfolios as well, leveraging some of the hedging strategies to the downside, maybe trying to have some upside potential because they may not be able to buy 100 shares of NVIDIA at this point in time, right? Like who's really doing that on a smaller scale, especially those that are in the younger generation or those that may have fallen behind when it comes to their investment. So I think it's a really nice opportunity to be able to show people how to get to that next level and how to be able to have some alpha or be able to generate alpha while also staying risk defined and utilizing strategies that make it a little bit cheaper but still get exposure.
And that's one of the things I think that many traders, especially newer in the space, don't really understand is how much leverage options can actually give you. Like you just said, very few people I know could buy 100 shares of NVIDIA. Yeah. However, there's plenty of option strategies to somewhat replicate that by taking a lot less risk and having to put up a lot less capital. So that's, again, another one of those things I think the network does a great job of explaining to people is how to navigate the markets and how to get the most bang for your buck.
Yeah, I really do appreciate that. And I'm right there with you too. I mean, when you're talking about some of that risk and leverage, let's kind of nerd out here real quick. There was an earnings announcement. It was a couple of weeks ago. I forget what it was. And this stock just completely ripped. It was a well-known stock, but you could just tell that market makers were just on the wrong side. They did not anticipate it. And so they were really, you just had this gamma squeeze to the upside, right? And that happens with market makers too. We kind of talk about market makers as they're like the holy grail of traders. Like, no, they're not. Nope. They're just trying to stay delta neutral as possible, maybe have a little bit of an edge to the upside or downside, and they just need to have enough flows to be able to generate dollars. But sometimes you can get caught off on the other side too, and that's when we see these gamma squeezes in NVIDIA or SMCI or what have you, or even movements to the downside. So definitely a lot of risk that's out there, and just to continue to have that education on all fronts, from the basic strategies to very complex ones, I think is critical for somebody to leverage these. And then also too, you get used to the strategies that you're comfortable with. Not everybody wants to trade butterflies.
That's right.
Some people will just, hey, I'm good just selling condors, or I'm good with debit spreads or just credit spreads. And I've seen very successful traders that just find their comfort level,
niche,
and they just execute. And executing risk management is really key for profitability.
So often less is more. You know, and people will want to just hop on the hot trade. And I always tell, my students, my traders, stick with what you're comfortable, with. Don't move outside the box if you're uncomfortable about it, because more often than not, it's going to work against you. You just gave me a great idea, and you and I should do this together. We should put together a webinar or something on really what is the role of a market maker, because I know most retail traders out there think of market makers as the devil. Oh, they're manipulating the market, or, I just put in a 90-cent bid and it's offered at 91 and they won't fill me, and people don't really understand the dynamic behind it, that like you said, market makers are really, they're there to take the order flow, right? They're market makers. We trading on the screens, though, we're market takers. But market makers, yes, they don't know which way a stock is going to move. They're trading the order flow that is out there. But I can't tell you the amount of times on a daily basis that I will get a comment from one of my students, "Oh, damn market makers, they did it again to me." Yeah. Or a market on a spread might be $1 bid offered at $1.17. So the average, the midpoint is 109, let's say. And they're 110 bid, 111 bid, they're not getting filled, and I'll hear, these market makers are doing it to me again. Yeah, we should do a webinar on that.
Yeah, and unfortunately, I mean, market makers in the past have done some bad things, right? But I think the leverage of technology right now, and just know that 80% of all order flow right now is automated and electronic.
Yep, doesn't even hit these people.
Yeah, so when you're talking about a market maker, there's not a guy, well, there is a guy or a gal that's sitting at a desk, but they're looking at their screen and making sure that their delta doesn't skew one way or another. Yep. And what they're really trying to do, especially when you're talking about options flow, they could care less what direction the market's going in. They just want that theta. And if they can stay delta neutral and they can make, 5 cents or 10 cents off an option, but if you talk about doing 20,000, 30,000, 40,000 contracts for a particular series, then that's where it becomes a little bit more profitable. So one thing to kind of say though there, Scott, is I tell people, you complain about market makers in the equity market and the options market, trade futures, because futures markets don't have designated and required market makers. They can pull bids and they can pull ask prices at any time, even if it's even the S&P 500.
I cannot tell you how often I tell my students and preach to them that, listen, if you're a market maker, you are literally obligated by the law, right, that you have to uphold these markets. Yep. Can't just pull those bids or offers. Can't if you're a market maker, you're not just going to turn the screen off when the what hits the fan, right? Like market takers or people trading on the screens, can do. So yeah, there's a lot of ill will, I would say, from people really that don't understand the process.
Yeah, I agree. I agree with you on that one.
Well, I'm going to talk to you offline about that, because I think we got something there.
Sounds good to me.
All right. So we're only, about 90 miles away from one another here? 100 miles maybe?
I would say so.
To where I am here, we should absolutely meet up in the middle somewhere one time when the pass is not closed and we can get through and have some dinner and talk about it.
For sure, man. Yeah, you let me know. I'm always down to travel. I'm always down to go up to the mountains as well. I haven't actually been up to the mountains, since like December to do some ice fishing up in Evergreen. I haven't been up there since. I usually don't, because the snowfalls this year, they've been kind of weird
Yeah.
with avalanche risk and stuff like that. So I kind of just chilled out here. But by all means, and you reach out.
We've had a very steady winter here. I wouldn't say it's been off the charts, but it's been a very steady, very enjoyable one. So
Yeah.
it's all good. Hey, I really can't thank you enough. I mean, you are someone that when I see something you put out there on social media or one of your pieces, 100% of the time I am reading what you have to say because there's never any fluff to it. I mean, it is the real deal. And besides being at the Schwab Network, where can people find you? Because I know you do some stuff out there. Some articles, pieces, and you appear on some other podcasts or whatever it might be. So where can people find you?
Yeah, so you can find me on Twitter at KG Bull and Bear or whatever they call it now, X. Starting to publish a little bit more. They have like a articles feature there, but if not, you can also reach out to me on LinkedIn, and they could just search Kevin Green Schwab, and I pretty much come up. I'll be the first one up there, and you can reach out to me there. I put articles out on LinkedIn. Try to do it like once or twice a week, but Scott, I really do appreciate the opportunity having me on here. And you talk a lot of good things about me. I wish that you could say that to the girlfriend here, but. But I think you and your crew, it's not just you, but you and your guys do a really good job with, once again, providing that transparency, being very thorough with the information that you provide. And we are lucky to have you guys on as guests all the time here on the Schwab Network. So thank you so much for what you do.
Well,
and let's connect again. And I'm down
for sure.
Market maker conversation. You want to nerd out on some commodities or whatever you want to do, you just reach out. I'm always here.
That's awesome. I really appreciate it. You're one of the good ones in this industry, that's for sure.
Appreciate you.
All right, thanks, man. I really appreciate it, guys. Again, Kevin Green, Schwab Network. Have to tune in, have to find him, have to follow him. The Minds of Markets podcast is an exploration, a deep dive into the minds of some of the best traders and investors in the market. Our goal is to help you, the listener, learn from some of the best out there, to improve your knowledge and skill set as a trader or investor. The Minds of Markets podcast should be used for information and entertainment purposes only. The opinions expressed in this podcast are our opinions only, and none of the information contained in this podcast constitutes a recommendation that any particular security, portfolio of security, transaction, or investment strategy is suitable for any specific person. Trading is risky, and past performance is not a guarantee of future results.